Good morning. It is May the 4th, 2017. We'll start with our usual disclaimer. Hypothetical simulated performance results have certain limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact of any of certain market factors, such as lack of liquidity. Simulated trading programs in general are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profit or losses similar to those shown. Okay, yesterday's Fed FOMC report said that the economy was on track. This softness in the first quarter of the year was transitory. That the Fed would be raising interest rates at least 2 more times this year. They did not say maybe 4. So, as we surmised going into the FOMC report yesterday, that the comments would be hawkish. The Fed had not announced any changes. They hadn't floated any trial balloons with the Fed governors up until that point. So what they had been saying previously was more interest rate increases coming in 2017, which is hawkish. So yesterday we went into that announcement with a 67% odds of a rate increase in June. Yesterday afternoon that had jumped to 95%. Now it'll come off a little bit, but right now the market's pretty well convinced that we're going to have an interest rate bump come June. Sell treasuries for sure, sell gold for sure, and the stock markets are awaiting good news in the U.S. on Trump's tax proposal, and the stock markets in Europe. The Le Pen-Macron debate. Macron was deemed the winner yesterday, so the status quo of the EU is intact by European stocks, and the European stocks were up a lot last night. Chinese stocks were off, Japanese stocks were up, so Japan, the UK, Europe, the United States indexes are all higher, and China's were off last night. And the Chinese selling was tied to a collapse in their commodity prices and a couple of insurance funds, market protection funds over there. So China's situation, again, China's just caught in this position that anytime they try to tighten, the economy starts to contract. A month or two later, they've got to come back in and reflate. Everybody gets all the money they want to keep their operations going as they are right now, and it's just at some point they won't be able to do it. We aren't quite as bad off as they are, but we're on the same track. And you always have time to change things before the fact. You always have time to nip a budding war right at its beginning, with put that country or entity back in its place. But there is not enough political capital in a democracy or republic to do that. And so what happens is that you can't really upset or change the status quo because of the lack of political capital. And at some point the war will start. And economically in a country, at some point when things get bad enough, you will have a catastrophic contraction where the slate gets wiped out to zero and everybody starts all over again. Then you have to do something, and that's when it's done. So the status quo in the United States was maintained this week with the budget passage. Everything that Trump said he wanted to do in the election that required a statute or a law to be passed has not been passed. His wall is not funded. And there's language written into that budget that he can't fund the wall or do anything. So Donald Trump has got a big battle on his hands, and if you're a betting man, you'd probably bet against Trump being able to prevail. So that's where we stand. So yesterday, off the Fed's comments that economic weakness in the first quarter was transitory, that was translated into sell treasuries, sell gold, buy stocks. Now, we have tomorrow's non-farm payroll number, and they're looking for 185K. And if that number comes in higher than forecast, treasuries and gold can sell further. We would expect the market to be contained today, the bottom not to fall out of it. Probably going to find sellers pretty close to where we're a little bit above where we are right now. So we have tomorrow's non-farm payroll numbers, and that tends to check the market. So we're going to play for a trading range today with a lower bias off the opening. We have jobless claims today, 246. I don't think anybody pays attention to that number anymore. We have productivity unchanged. We have unit labor costs up 2.5%. Number seems a little high to me. Factory orders up 0.4. That would be a negative for treasuries and gold. And nat gas inventories up 61B. This is the time of the year where they inject into storage. No one will pay attention to that outside of the natural gas traders. So factory orders is the news focus. The direction of the E-mini will drive treasuries. So here's the break in the market at 12. So 11 to 15 sell 1. 19 to 23 sell 2. On the buy side, we're going to take it a little lower, 1 to 5 buy 1. And 25 to 29 buy 2. I think with the new software, we'll have Peter come on. I was introduced to it last night. We've been talking about it for a long time. He's already removed a couple of the irritants that we talked about on the screens that I use. But there's so much capability on this, on different studies and the rest that we'll be learning over the next year or so. Pretty exciting stuff. Okay, looking at the 30-year. Trying to look at the 30-year. Okay, the first resistance band right here's where the break is at 8. So 8 to 12 is number 1. Sell 15s to 19, sell 1. 23, 27, sell 2. On the buy side, the buck to 04, number 1. First buy is 25 to 29. Second buy is 17 to 21. Do like the short side better. I think the first trade of the day is find a place to get short. And then got to bust 105, 150, 120, 24 to stay with it. Looking at gold. We left yesterday liking the short side of the market better. We didn't get much of a rise in the EU. We had a yeah, we're leaning against 50. We did not even get close to that. So market is selling. Here's the attractor down here at 1227. So first buy is going to be 30.32. The desired buy is 25 to 27. A resting limit buy at 27.10, 27.20. We'll put you right up against that. The other play would be stops below 25. Right here selling 35.37, sell 1. 39.41, sell 2 will come inside the Globex highs. Okay, Macron was declared the winner in last night's, yesterday's debate between Le Pen and Macron. So Macron is expected to win come Sunday, and you see how the euro responded to that. Our first sell was in the 50 to 60 area. 25 to 35. Our second one was 45 to 55, and we got up to 65. So got a seller at 60 to 70, and then we'll make it 90 to the buck. Still think we got a pretty good chance of getting stops over 110, and we've been talking that for a couple of weeks. 25 to 35 by 1. 109 even, 1910 by 2. And we had a buy last night at 109, so we caught one edge of the market really, really well. And you'll find in our research that we're going to get one edge of the market on almost everything that we cover. And quite often we get both edges of the market, but in the four contracts that really work, gold, crude, the bond, and the E-mini, one of those will catch both edges of the market, and sometimes two. And that's pretty amazing from where is support and resistance standpoint, because our trades are based on where is actual support and resistance. So we're pretty good at knowing where that is, and that's pretty easy to do with our software and with our templates that we use to overlay and trade the markets. Okay, crude, we like the short side of the market. We're hoping to sell 48s against that yesterday. We didn't get it. The high was 75. We're below 46. Our buy was the 46.75, 47 area. So 46.50, 46.75 buy 1. Looks like we're headed to 45, 46 even, 46 and a quarter buy 2. Now yesterday we were pretty confident that we would have a pause day after that spill, and that's usually the case in crude oil. Continuation comes. Here we have first day of it, pause day. Then the second day after the break or the rally, crude usually extends and moves. So we got a low volume number here right below in the 65 area, and I think we got a shot at getting down to that. On the sell side, 47 and a quarter, sell 1. 47.50, 47.75, sell 2. Now, if I were going to manipulate the market and protect my prices as Saudi Arabia or Russia, I would, it's the cheapest way to do it's in the futures markets. And Russia knows how to play the game. I'm not sure Saudi Arabia does. But I just watch Russia manipulate the markets in their favor regularly for a long time, especially gas oil in the winter. Okay, the E-mini is pointed higher. 23.95 is within reach. We'll probably hit that. The issue is, do we have enough to break it out today or tomorrow? And I'm going to guess maybe tomorrow is the day that we go above 2,400 if the non-farm payroll comes in above 185. We're at resistance right now, 90.91. So everything's a P, everything's pointed higher. We got a great big P behind us over here. Structure supports higher prices. The UK and EU markets are up because Le Pen was deemed the loser in yesterday's debate, and that the EU status quo will be maintained in the EU minus Britain. So a retest of the 95 areas there. So 94, 96, sell 1, and sell 2, 99 to 01. Don't think we have enough to take it out and hold it today, but could happen, but I don't think it will. On the buy side, 85, 87 will be our first buy zone, picking this area up right here. We love our 2s better. 80, 82 would be buy 2. And a resting limit buy against that high volume number would have you long basically at 82. Today's news, jobless claims 246. Don't think anybody pays attention to it. Productivity unchanged. Unit labor costs plus 2.5. Factory orders plus 0.4. They will pay attention to that. And nat gas inventories plus 61B. The news focus is tomorrow's non-farm payroll number. Okay, going to take a bit to get stuff up and posted. I'm going to get busy on that. I will be back with you as soon as possible.